Hello and welcome to episode 340 of the Money to the Masses podcast with your resident expert, as always, Damien Fay and me, Andy Links. Damien, welcome back to the show. How are you doing?
I'm good, Andy. Thank you. It's been another week of settling into the new house, which I now feel slightly more at home, but I'm still surrounded by boxes that I'm slowly unpacking. So it feels like a slow return to normality, but of course, coming into the Money to the Masses towers, doing the podcast and everything like that does help with that sense of normality. So I'm grateful to be doing the podcast this week. So I'm not unpacking boxes effectively.
Have you ever been tempted to do the Russian roulette of unpacking, which is basically unpack one, throw one, unpack one, throw one, and just see what you end up with in the end?
I've not gone and done the unpack one, throw one. I've done the unpack one, loft one. So I've getting boxes that I've clearly marked as they came from the loft in my old house in the eaves, and they are now not being opened and going back into the new loft, which does raise the question, if I'm not even looking in them, would I be better off just doing the tip? Do you mean throw it? Because it's just going from one dark space into another dark space, actually. So, yeah, maybe I should do the unpack one, throw one. But we are getting there, Andy, slowly but surely, discovering all the leaks and all the things that you never find out until you live in a house. But I'm happy that I made the move. So, and the other things members of the team have learned. But before I tell you what's on this week's show, Andy, I'm going to just read out two more reviews that we got in the last couple of days. We got a review from Quad that says informative and accessible, great listen and highly recommended. And we also got one from Go Rishi, I think that says 63, which said great podcast, very useful and to the point information. Thank you with an exclamation mark. And of course, they were both 5 stars. So if you could leave a review, then that would be fantastic. It's incredibly motivating for the team, helps us in the charts, as we say every week. And if the review is read out on the podcast, do write in and claim it as your own, because you may well get a Money to the Masses mug. Somebody did do that last week. One of the reviews we read out, they wrote in, and Lauren has sent them a Money to the Masses mug, or will be sending them in the near future. So on this week's show, Andy, we've got 3 pieces. As usual, we've got an investing piece, the best trading apps for beginners. And actually, you're going to be doing that piece, Andy, aren't you? Because you written the article this week and did a hell of a lot of research into that particular area. I'm going to invite Laura back onto the show because in the office, we were discussing a topic. What happens to your debts when you die? And we were talking about all kinds of debts, not just credit cards, for example. And it seemed that there wasn't a universal understanding. Most people didn't really know the definitive rules. So I thought it'd be an excellent piece on the podcast, which Laura, who does all of our credit writing, is going to come on and talk about. And I'm going to do a kind of related piece, actually, because credit reports. We've talked about credit reports on the podcast in the past. We mentioned that people should go and check their credit report. But what I want to do is tell people how you can do it for free, because most of the services out there are paid for services, but how can you check your credit report? Because you all have more than one, don't forget, which I'll explain in the piece, how you check those for free.
Okay, so I'll start with the first piece, and I'm going to be talking about the best trading apps for beginners in the UK. So I decided to do a bit of a deep dive into trading apps because they were, if you think back to earlier in the year, it seemed everybody wanted to get involved with trading. Now, the more experienced investors will know that there are platforms out there, and they've been around for a long time now, where investors can buy and sell shares online. But the problem is it comes at a cost. Now, depending on which platform you use, it will either be per trade, or perhaps you'll have to pay a subscription and you get a certain amount of trades thrown in, and after that you get charged more. But the key thing is, if you are an active trader and like to buy and sell shares regularly, then those costs can mount up.
So you're specifically alluding to the likes of Hargreaves Lansdown, Interactive Investor, those kind of platforms that are very good universally in terms of investment options. You can buy individual shares, but you can buy funds, which I think is what most people will do on them because they geared up for that. But you can buy those other types of investments, but there are these additional costs you have to bear in mind.
That's it. And so with that in mind, I decided to look at the trading apps that are out there, and there are many of them that are designed specifically for trading equities, for example, shares. So the first thing to really consider is, what is it you want from the app? So the sort of questions you should be asking yourself is, how user-friendly is the app? Is there a minimum investment amount? Does it charge any commission for the trades? And we'll come on to that in a minute, because some do, some don't. Does it charge other fees like currency conversion fees, withdrawal fees? Can you invest in an ISA? Can you do it tax efficiently? Does it offer more complex instruments like Forex and CFD trading? And of course, security should be a key concern for most people as well. So is it covered by the Financial Services Compensation Scheme? Is it FCA regulated? And the final thing really is, does it offer any welcome bonuses? Because that may be the thing that sends you to one particular app over another. So I looked at 5 of the top apps. There's lots and lots out there, but these are the 5 that you've probably heard of. And so what I've decided to do is to rate each app on what we think they're good for. So the first one we looked at was eToro. And so what I'll do is I'll just quickly run through a couple of the pros and the cons, also the fees and what they're good for. So eToro is a great app for those who like to do social trading. Now, for those who don't know, social trading is almost like a social media for traders. It's where you can go onto the app and you can follow people that you like and who maybe have had success, and you can actually copy their trades in real time. So it's good for people who don't necessarily want to dig into the detail and learn about trading themselves. Obviously, it all comes at risk, because if you're following someone else and not doing your own research, you just need to be mindful of that. eToro, for me, is a little bit expensive. There are quite a lot of fees associated with them. While they don't charge commission on share trading, they do charge other fees, and these are the things you need to be mindful of. They have a 0.5% currency conversion fee. Now, when you actually put money into your eToro account, you have to convert it to dollars. And so straight away, you're being charged on 0.5% of everything you put into the account. There's also a $5 withdrawal fee every time you want to bring money back into your bank account. So if you're someone who wants to put money in and take it out a lot, those fees are going to add up. And there's also an inactivity fee, which is $10 per month after 12 months of inactivity. So if you're not going to be trading every day, or at least every month, then just be mindful of the fact that those will erode your funds in your account.
I think that's quite cheeky, really. I mean, I know this is something that you get on these platforms, but an inactivity fee is almost, it's a penalty basically, because they're not making money out of you by you using the services. But there are others which you're going to come onto that don't actually charge that. Okay, so what are the pros of eToro and what are the cons?
Okay, so we've mentioned the social trading feature. That's obviously one of the key pros. The sign-up process with eToro is really simple. They've absolutely nailed that. And that's obvious by the fact that they've got 20 million users worldwide now, which is, it's the largest of all the trading apps. And they've got some really good advanced research tools. So you can click around, you can watch videos and tutorials, and you'll learn a lot on there as well. In terms of the cons, again, it's all about the fees and the minimum deposits. So in order to open an account with eToro, you need to have an initial minimum deposit of $200. Now, to some people, that won't be a lot, but for many who are just dabbling and just starting out, that is very high when you consider the others we'll come on to in a second. And the other cons we've already mentioned is the fees. You've got the $5 withdrawal fee and also the $10 inactivity fee.
Okay, so what's the next app then, Andy?
The next one is Free Trade. We've labelled this as good for commission-free trading. I really like Free Trade. It was founded in the UK in 2018. They've kept things simple. The fees are really straightforward and they're very transparent. So I'll run you through the fees now for Free Trade. No commission at all on share trading. So you can do that as much as you like, as many trades as you like, and you'll never be charged. There are no withdrawal fees at all, and there is no inactivity fee at all with Free Trade. Now, where do you get charged? Well, if you want to invest tax efficiently, so you want access to a stocks and shares ISA, that's where the fees come in. There's a charge of £3 per month. Or alternatively, you could upgrade to the Free Trade Plus account, which comes in at $9.99 per month. It's a subscription service that automatically gains access to that ISA that would cost you £3 a month otherwise. But there's a few add-ons that they throw in. You've got access to additional shares and you get priority support.
So that's how Free Trade make their money then, from these quite transparent fees. So if you want the advanced account effectively, that monthly charge, or if you have an ISA, so you're going to have that monthly fee.
That's right, yeah.
And what about the currency conversion fee? Because you didn't mention that.
Yeah, that's right. There is a currency conversion fee of 0.45%. So if you're going to be trading shares in a different currency, then you've got to expect to pay that on top of the shares that you're buying.
Yeah, so you don't have to convert into dollars like you do with eToro. So you can just avoid that currency fee, therefore, I'm assuming, if you stay investing in UK shares.
Exactly right, yeah.
So what about the pros and cons for free trade?
Well, one of the major pros for free trade is they're the only trading app that I have reviewed that gives a welcome bonus to new users. So every new user will get a free share worth between £3 and £200 when they sign up. And we explain how you can do that on the website. We'll link it to the show notes there where we've done a full review on free trade. They also have a really good, thriving, helpful online community. So if you've got any problems or questions, you can go on as part of the free trade online community and you'll get an answer in seconds from like-minded people. And again, a great thing about free trade is they've really nailed the application process. It's a really simple sign-up process. Users will generally have a new account set up within about 5 or 10 minutes. In terms of the cons on free trade, there are limited research tools and tutorials. We talked about eToro is really good at that kind of thing. Free trade has got maybe a little bit of catching up to do, but again, they have got that community who can help you. They don't have more complex trading instruments such as Forex trading or CFD trading. We'll explain what that is when we come on to the others because they specialize in that. So it really is for those who simply want to go and buy and sell shares. And that's not necessarily a bad thing, especially for beginner investors. And there is no desktop version. A lot of the other apps that we've reviewed, you can go onto a desktop and log in and do your share trading that way. But free trade, it's just on an app.
So although you put it as a con, I mean, it gets a big tick from me, free trade. And one of the reasons, actually, because it doesn't offer the CFDs. And if you want to know what a CFD is, don't forget, if you go back to podcast 307, I did a whole show explaining how CFD trading works. But it is a more complex product. And I think, given that most people who enter into it lose money, I don't think it's a negative that they don't actually offer that as a service at all. So people can just trade on the app without having to get into CFD trading, which effectively means that you can start to leverage the amount of money that you invest, which can mean that you can lose significant sums of money. So who's up next, Andy?
Fineco Bank is up next, and they're a relative newcomer to the UK market. They only launched in 2017, but they've got a solid history in Europe. They started out in Italy back in 1999. They are essentially a bank. Fineco, by the way, is spelled Fineco Bank, all one word, Fineco Bank. And these are a good option for those who want to combine all of their banking, trading and investing in one place. Now, with some of the trading apps, obviously you've got to keep depositing money in. There might be conversion fees for doing that, and then you've got to withdraw your money back. If you use Fineco Bank for your banking, trading and investing, then it does simplify that process and it does cut down on the fees as well. And we'll go on to fees while we mention it then. Fineco Bank does actually charge for share trading. It's £2.95 per trade. That's UK trades. There are different charges for trading overseas shares, and we list all of those. There's lots of different charges depending on which country you're buying shares from. So you can check out the full Fineco Bank review for a list of those charges.
Yeah, before you move on, Andy, I just want to point out to people that we have got full reviews of all of these services on the Main TMS's website. So you can go and search the name of any of the services that Andy's mentioning in this podcast. He does have an overview post, which we will link to as well, with a beautiful table, which makes it very easy to compare the different services. If you haven't grabbed your pen and paper while listening to this particular podcast, but do go and check out that article, which is a nice summary article. But we do have full-blown reviews of all of these as well, which people will find useful.
And while we talk about fees, then let's quickly run through them for Fineco Bank. There are no withdrawal fees, no inactivity fees. They don't charge for fund trades because you can trade funds with Fineco Bank as well. There is a platform fee of 0.25% on the first £250,000 if you want to trade funds. So it's really an all-in-one service that Fineco Bank offer, but just bear in mind that there is a charge for actually trading those shares. One final thing in terms of the fees is they don't charge for CFD trading and there's no added spread. So the next two we're going to come on to are really sort of CFD specialists. But if CFD trading is your thing, then perhaps consider Fineco Bank because they don't charge an additional spread on top of what you're trading. So it keeps costs really low, especially if you're very active in that.
It seems to me that on this one, Andy, that it has a feel of like a middle ground between what is a more traditional platform that has the platform fees, allows you to invest in funds. As long as you bank with them, then you can avoid some of those costs and also the minimum deposits. So it seems to be a little bit of a middle ground and suitable for those people who are going to bank with someone like Finico Bank anyway.
Yeah, that's exactly right. And actually, there's no currency conversion fees at all. So you can trade in lots of different currencies internationally. While you will be paying for the trades themselves, you're not going to be paying any extra for any currency conversion. So, there's pros and cons. Like you say, it's kind of, that middle ground with Finico Bank. Let's move on then to the last two of the list. The next one is Plus 500. Now, this is a good trading app for those CFD trades and Forex. So again, those more complex instruments, I really, like Damien said earlier, if you're new to investing, be very wary of this. Every site that you go on, every trading app that you go on, there's a big banner at the top that tells you that between 70 and 75% of the people that trade these kind of things will lose money. So this is verging on gambling. So just be really careful.
Yeah, then that warning is there because the FCA make them put it there. So that just shows you how serious that you have to take it. So this Plus 500 then, Andy, is good for the sort of CFD stuff and Forex. Do they do demo accounts then? Or is this got to be for somebody who just steps right in? They got to know what they're doing.
Yeah, exactly that. They have got a demo account, and it's actually their demo account that has made me realise that I will never, ever trade CFDs live in the real world myself, because as part of doing this research, I downloaded a demo account. Now you can do that as well yourself, and I would actually advise people to do that to see the risks that are involved. You get £40,000 and it's as if it's real money. It looks like it's real money, and you are trading in the real world but with a dummy account. And I'm already £16,000 down, and I thought I was, I knew my stuff.
Yeah, see, I'm different. I wouldn't even download it because I just don't particularly like the CFD world here. But it's horses for courses. If people want to do it, then you can't stop them, which is why we did a podcast in the past explaining what CFD trading is and also warning of the dangers of it. What about the charges for Plus 500 then?
So there's 0% commission on share trading, so you're not going to be paying anything for trading in shares. There are currency conversion fees up to 0.7%, and there's a sliding scale depending on what you're trading. There's no withdrawal fee with Plus 500, but they are one of these companies that do this sneaky inactivity fee. I really don't like it. It's $10 per month that's charged after 3 months of inactivity. So if you were really busy on trading through the summer and you thought, do you know what, I'm going to take the winter off, I'm going to sort of let things settle down, be careful, because you will be being charged $10 a month after 3 months if you're not actively signing into the app. One thing to be aware of with Plus 500 is that they charge overnight funding fees, and they vary depending on your holding. Plus 500 is really set up for day trading. It's set up for quick buy and sell, not for holding on to your holdings long term. If you do, it's going to get very expensive because those fees do stack up. And it really does depend on what you're buying, how much of it, as to how much you'll be charged. So just be really careful of that charge. It can very easily add up. The pros and cons then on Plus 500, it's got that great demo account that we've mentioned. That's what I like about it. It is good for CFD and Forex trading if that's what you're into. They're really geared up for that. And you can trade on both mobile and desktop. So you can move from one to the other really seamlessly. In terms of the cons, again, I mentioned earlier, the overnight funding fees really are expensive. And you've also got those other fees, such as the inactivity fees, that I don't like. When I was looking at these apps, I also look at all the review sites and see what people are saying about them. And one thing that came up time and time again with Plus 500 is the lack of and the limited customer support. So if you're having any problems with them, don't expect to get that resolved anytime soon. Moving on then, and this is the final one we're going to be talking about today, is Trading 212. Now, this is a really good app if you are someone who likes to dig into the detail, because there are hundreds of video tutorials, video guides for you to sort of get into and understand how share trading works. And you can access all of those directly from the app. You can also go onto the YouTube channel on the desktop, but straight from the app, it couldn't be any easier. And that's why I really like these ones. It was launched in the UK in 2016. It's been around for a while now. It's another one of these apps that has a demo trading account. So it's really good if you want to be able to learn the ropes. In terms of the fees, again, 0% commission on share trading. So you're not going to be charged for trading shares. There is a currency conversion fee of between 0.15 and 0.50%. So just be aware of that. And in terms of the other fees, then there are no withdrawal fees and no inactivity fees. So a fairly simple charging structure. You know what you're going to be charged with trading 212. In terms of the pros, again, mentioned earlier, the useful video guides, really good, and it's a user-friendly app. And again, commission-free trades, nice and simple. In terms of the cons, there is no phone support, so you're going to need to raise a ticket online and hope that someone comes back to you soon if you've got any issues. And of course, another con is the fact that it charges currency conversion fees, and they can mount up. They're up to 0.5%.
I think that's a fantastic piece of research that you've done there, Andy. Just a big high-level takeaway. Free trade stands out because of the lack of fees, unless, of course, you're paying for the subscription count and the monthly charge on the ISA. And it doesn't have the CFD element. For some people, they will like that, and also you get the free share. But then you go down at the other end, if you want that trading stuff, Trading 212 seems to be similar in terms of cost, but without those additional fees on ISAs or an advanced account. But you can also trade in things like CFDs and Forex. So I think it's a great roundup. And obviously, as you said at the beginning, eToro is good for that sort of social trading if people are into that. So that's a fantastic piece, which I think people will find useful. As I mentioned during the piece, do check out the links below this podcast in the show notes, or if you're on the website, below the article itself, and we will point you towards reviews for each of these different services, as well as Andy's fantastic summary.
Okay, so next we've got Laura coming onto the show, who's going to be talking about debt and more specifically what happens to that debt when you die. So this is a fairly complex thing, and when Laura started to dig into it, there's actually more to it than you would think. So Laura, welcome to the show. So let's talk about debt when you die then. It's a morbid subject, but there's lots to learn here.
Yeah, I think that the main question that people want to know and are really interested in is whether debt is inherited. So if someone a family member dies, who takes responsibility for that debt? Is that something that as a spouse or child, for example, you're going to become responsible for? And the short answer to that is no. In the UK, debt isn't inherited. What happens is that the person who dies, their estate then becomes responsible for that debt. So the estate is made up of property and any other savings or assets that that person has. And any outstanding debt would then be paid for out of that estate.
Okay, so we're going to go through and run through different types of debt, such as mortgages, loans, credit cards, and even student loans, and explain what happens with each of those types of debt when you're in this situation when someone passes away.
So starting with mortgages then, that is clearly for most people the largest debt, and actually the one that is probably the most complicated in terms of paying off that debt when someone dies. It's often a concern of relatives of whether the family home is going to have to be sold. And to cover some of those issues, really it's going to depend on a number of factors. So the first thing to keep in mind is whether there's some kind of life insurance policy in place that will cover that debt. And that, in effect, solves a lot of that problem of having a big outstanding mortgage debt to pay. If there isn't insurance in place, then it's going to depend on the type of mortgage it is. So if you have a joint mortgage, the other borrower will automatically take on the deceased's share of the mortgage. So they will then have to pay the full monthly repayment. So that can become a real financial burden. And it may be the case that that borrower will then have to sell the property or refinance in some ways to be able to make that mortgage affordable. So if you have a joint mortgage and you are tenants in common, that there's a slight difference with that. So instead of the other borrower borrower automatically taking on the share of the mortgage. The deceased's share will go to whoever it's been left to in the will. So that may be the other borrower, it may be the spouse, or it could be someone else. And that person will then have to take on that mortgage debt. However, it's made slightly more complicated by the fact that if you are not simply joint tenants and the mortgage passes automatically, the property does go into the deceased person larger estate. So if there are other debts present, there is a possibility that that property will have to be sold to pay for those debts. And that is the case too if you have a joint mortgage but you are tenants in common. It could be a possibility that that person who inherits that part of the mortgage may face issues with the fact that it is part of that larger estate, and that property may still have to be sold to meet the obligation of other debts. The same goes really if it's a sole mortgage and it's left to somebody in a will. If there are other debts, the property will have to be sold in order to pay off those debts. However, you may, as a beneficiary or a potential beneficiary, try to negotiate with the other creditors to pay off the debts separately so that you can inherit the property whole and you don't have to go through the process of selling the property.
So we've covered mortgages in fair detail there. And again, this is just help and guidance. Laura's written the article, which goes into more detail. And if you feel that this is something that might impact you, then obviously you can seek advice from someone who does this for a profession, maybe a probate solicitor, to iron out the creases and to really understand how it might impact you. Let's move on to other debts then. So what happens to credit card, personal loans, and overdraft debt when you die?
The way that those three types of debt are treated when someone dies is very similar. So if the debt is a joint debt, so if you have a joint credit card with someone, a joint bank account with an overdraft, or a joint personal loan, the responsibility for the outstanding debt will be taken on by the surviving borrower. That happens automatically. Alternatively, if the debt, whether it be a credit card, a loan, or overdraft, is only in the deceased person's name, then again, it will be taken from the deceased's estate. It'll be up to the executor of the estate to work out exactly how much the debt is and to arrange for that debt to be paid out of any money that is in the estate. So it won't be the responsibility of any of the family members, or spouse or children to pay off that credit card debt, for example, out of their own pocket. It will come out of the estate. It's important to note, though, that if there isn't enough money left in the estate to cover off all of the debts, then that debt is likely to be written off by the creditor. One thing to be aware of is guarantor loans and what happens if either the borrower or the guarantor dies in that arrangement. So actually, if the borrower dies, then the guarantor, as you would expect, takes on the responsibility for making the monthly repayments on that debt. But also, if the guarantor dies, perhaps you might think that their responsibility to guarantee that loan would die with them. But in actual fact, that responsibility continues even after death. And depending on the terms and conditions of that particular loan agreement, either it may be passed on to the guarantor's spouse, or it may be that part of the deceased's estate is used as collateral for the remaining debt.
Great. And actually, you mentioned there about paying off that debt through the estate. We're going to cover that at the end of the podcast, exactly how to do that. There's one kind of debt that actually we haven't covered, and it's treated slightly different, isn't it? So what would happen to student loan debt if you die?
Yeah, it's interesting with student loan debt. So that is automatically written off if you die. So if somebody dies, the executor or even a family member can contact the student loan company, provide evidence that the individual has died. So that may be a death certificate, and then that debt will be written off in full.
Okay, then, so we're in this situation. Someone has died, there is debt there, and we need to get it paid off somehow. What's the process?
The onus is on the executor of the will to deal with any outstanding debt. So it is down to them to take stock of all of the property, savings, investments, or any other assets that the deceased person had, and also to contact creditors to find out the exact total of all of the debts, the outstanding amount. And it will also fall to them to make sure that those debts are paid off from the estate, and to perhaps oversee the sale of a property or other assets in order to fulfill that obligation. An important point to make is that it's also the job of that executor to look for undisclosed debt, so unknown debts that the creditors may come at a later date to make a claim on the deceased estate. To overcome this issue, it's a good idea to place a deceased estate's notice in a local newspaper, because that can help to mitigate any responsibility of creditors coming at a later date and making that claim, because actually the executor takes personal responsibility for any additional debts that are claimed later after the estate has then been divided among the beneficiaries. So to try and avoid that risk, placing that advertisement in a local newspaper and then waiting 2 or 3 months to actually divide the assets is a really good idea.
Okay, so I think we've done a good job there of explaining what happens to certain debts if you die and how you go about paying those debts off. Is there a way of mitigating this?
Yes, so the easiest way to avoid issues with outstanding debt is to have life insurance in place that will cover that debt in the event of your death. It's also really important to make sure you have a will in place, because that will make the job of the executor much easier, and it will make the whole process of probate much smoother. And also just to have your affairs in order as much as possible, and to have documentation available for your relatives and for the executor of the will, so that it's easy for them to see exactly what debts there are, what the obligations are, and what the assets are.
Okay, great. So that makes sense. If you're worried about debt and the burden of that debt, then just get some life insurance in place to cover it. And so don't forget, you can read the article that Laura's done in full on the website at moneytothemasses.com. And we'll also put a link to that in the show notes for you to read should you need to. Okay, so moving on to the last piece then, Damien, you're going to be talking about credit reports, going to be looking at these credit agencies and specifically how you can get a credit report for free.
Okay, so in the UK, there are 3 credit reference agencies. So they are Experian, Equifax and TransUnion. So when you ever hear people say check your credit report, there are technically 3 different places that you should be checking. And each of them will have different information on their respective credit files, and that's because the information comes from your past borrowing from lenders, information from official sources such as the electoral roll, and information is used to build up a picture of somebody's credit worthiness. Now, each of the different agencies will offer a credit score. Now, just to be clear to people, there is no one universal credit score. You do not have a credit score. So there is no Andy Leake's credit score in existence. What you have is the information with these credit reference agencies, which lenders can then use to score you and decide whether they're going to lend money to you. But each of these agencies will create their own credit ratings, so their own credit scoring. And again, like all these things, it's never simple. Each of them will provide their own credit score, which you can look at, which gives you an idea of how creditworthy you are. Experian, for example, will create their own Experian credit score that's ranked between 0 and 999, while Equifax, it's between 0 and 1000, and TransUnion's is between 0 and 710. So it's difficult to compare each credit score with those agencies, but they do give an overall indication of how creditworthy you are. Now, of course, every year you should check your credit reports with each of these agencies to make sure there's no mistakes on there's no credit being taken out in your name that you're not aware of. And particularly if you're going to be applying for credit at some point in the near future, let's say you're wanting to apply for a mortgage, then you really do need to check your credit reports, because the lender is going to, and if there's anything on there that might stop you getting that mortgage, then your dream of moving house might come crashing down around your ears. So make sure you check them ahead of time. Now, how do you check them? Well, you can go to each of the services directly, and legally they all have to offer a statutory report that you can look at. Now, these are free with these agencies. So what you get is a very dumbed down, simple credit report that doesn't give you all of the bells and whistles of a full credit report. If you want to have that, for example, via Experian, which is the most used credit reference agency in the UK, then there are a number of paid for options that you can use to check your Experian credit report and your Experian credit score. And they include a £14.99 a month subscription service. And that will give you access to a whole bunch of Experian services as well. Plus, you have an option of taking out a service that protects you from identity fraud, which costs £6.99 a month. So obviously, this will cost you money, but there is a 30-day free trial on these things. So you could take out the trial, check your credit report, check your Experian credit score, and then cancel it immediately, and then you shouldn't get charged. You can check your Experian credit score as that's available for free, but you want the information really on your credit report. That's what you need to look at. Now, one way of actually accessing the Experian credit report for free is via the Money Saving Expert Credit Club. Now, it's a good way of keeping on top of your Experian report without having to commit to that relatively high monthly charge that's levied by Experian itself. So you don't have to do the trick of cancelling the 30-day window of that free trial. If you go directly with Experian, you can go via the MSE Credit Club. So we'll put links in the show notes to the article where you can then find links to the MSE Credit Club. If we move on to Equifax, now they have a charging structure as well. So you can pay £7.95 a month to view your Equifax credit score and credit rating and access the Equifax Web Detect identity fraud and protection service. So again, they want you to take out a service that you pay for to access the full report. As I said, you can get statutory reports for free, but they don't have the full information of your credit reports with the agencies. However, if you don't want to pay the charge for the Equifax report, then what you can do is that you can access it for free through ClearScore, which has committed to never charging a fee to provide your Equifax credit score and credit report. And the reason it can do that is because ClearScore is remunerated by marketing credit cards and loans that match customers' credit ratings from a panel of lenders. So it earns commissions on sales. So it's a different model, but it gives you access to that Equifax report. Then TransUnion, which is the third agency that you need to check, you can use credit brokers, Credit Karma, or Totally Money to access the TransUnion full report and credit score for free. Again, they make money by marketing credit products rather than charging you a fee to access those reports. Now, interestingly, there isn't actually a paid-for subscription service directly from TransUnion, so that's why you need to go via these services anyway. So to sum up, people can access all three of those services without having to sign up to these long-term deals. You can use other credit brokers, for example, to access each of the different services, as I've mentioned. And one final way, because it might feel a little bit convoluted having to still do all three of those, you can use Check My File, which gives you access to your credit score and credit report from all three main credit rating agencies in one go. There is a £14.99 per month charge, but again, there is a 30-day free trial. So you could just use that service, check them all, and then cancel the 30 days and not have to pay a penny.
Great. So that's it for this week. If you want to get in touch with Damien, you can do so in the usual way. It's Damien at moneytothemasses.com. Twitter, it's at moneytothemasses with a number 2. We're on Instagram, TikTok, and don't forget about the Facebook community group. Just go to facebook.com/groups/moneytothemasses. Damien, we're done for this week, aren't we?
Yes, we're done, Andy. So I will say, as ever, until next time.
Until next time.